Hello and welcome to InsuranceAsia News. I'm Kristina Shperlik, Senior Reporter, and I have with me today Vincent Banton, Head of Construction and Infrastructure Asia at Aon. Welcome, Vincent.
Thank you.
Today we will talk about construction insurance market trends in Asia. Vincent, I would like to start our discussion today with pricing trends. Could you please tell us more about how the competitive landscape influenced the construction insurance pricing in Asia?
Well, in Asia, we are seeing increased competition from the markets in recent times. The last couple of years, I think we're seeing insurers moving into profitability after quite a long and sustained soft market. And a lot of the long-tail business that affected the markets on multi-year risks has started to reduce or if not completely finish. And so with that, the insurers are seeing better margins in a harder market cycle with better rates. And I think across the board, most insurers are looking to achieve that growth. The result of this is an increase in capacity in the markets, especially in emerging markets as well, which is great for the market in general, great for our clients. And to have a capacity-rich market means a sustainable market and more options for everyone, especially the insurance buyers. The second thing that's affecting the pricing in the market at the moment is the increase in technological innovation and digitalization as well. From the insurer's side, better, more sophisticated risk assessment tools. But on the brokers and especially Aon side, a more developed and sophisticated risk analytics suite, which is helping our clients develop confidence in traditional and alternative risk transfer solutions, which is optimizing and making premium costs more efficient.
You've mentioned multi-year projects, and we see many of those in Singapore and Hong Kong. How can carriers effectively manage risks for multi-year projects in markets like Hong Kong and Singapore?
Carriers need to have a developed, data-driven approach that looks at tailoring these multi-year solutions in the best way possible. It's really important at the outset that the carriers have a robust risk assessment, and that robust risk assessment continues through the life of the project as it develops through, and that might be through regular inspections, dealing with risk engineers, but also that the quality of their brokers has that technical and experience and capability, but also the insurers as well to manage those risks and understand those risks, to work with them. Then the collaboration part comes in, and it's really important to get that collaboration, not only with the broker and the client, but the insurers coming into that process as well, as early as possible. We really think that it has to be early in the process. It has to be thinking about when we're at the tender stage, the design stage, getting the insurers' involvement, using their experience and knowledge in the markets, what they've seen in the past, through different safety protocols, through disaster preparedness, and how they manage their monitoring and inspections. To get that integrated early goes a long way to improving the risk profile and the overall insurability of the projects.
What are the main factors driving the growth of construction insurance markets in Asia after the pandemic?
Yes, I think it's definitely true that the construction market, in terms of the industry and the insurance market, is recovering after COVID. I think the government's prioritised construction after COVID and the pandemic to stimulate the economies and generate the growth that they needed. And they've done that through the public investment, through the government routes, but also in foreign and private investment has increased significantly over the last few years as well, through the form of PPP projects, PFI, build, operate, turnover. And this investment is stimulating the growth of the countries and the major cities, and the transportation networks are being developed, road, rail, as well as commercial housing and other industrial projects. So the first thing to say is the investment has been there, and that will continue, I believe. Foreign companies and foreign investors are seeking these as good vehicles to generate returns, and major projects in these countries are definitely a way to do that. The second thing is urbanisation due to population growth in Asian cities and Asian countries. As the population grows, the demand for infrastructure is there, and so clearly this creates a need and a demand which ties into the opportunity for growth of construction projects as well. And then again, the technological innovation that's happening around the industry, whether that might be creating the efficiencies for the insurance market that we need, or also creating the practicalities in the construction market itself. It could come in the form of drones for monitoring, for example, AI for predictive modelling. And again, this is creating efficiencies not only on the construction side, but in the way insurers look at the risks in terms of modelling and predictions, but also their understanding. And this has enabled insurers to offer more comprehensive and innovative products for our clients.
How can insurers adapt their strategies to diverse markets across Asia?
It's very important that carriers do adapt their strategies across Asia, because every market and territory is quite different in many ways, whether it's the economic environment, the regulatory environment, or the legal environment. So it's a very important issue that carriers and brokers have to consider across Asia. The first one is the local product offering and how that varies from place to place. For more emerging markets, say for Indonesia or India, for example, there's more of a focus on affordability and accessibility into the markets. Whereas if we're looking at more developed economies or developed markets such as Singapore or Japan, for example, the clients demand more complex solutions for their risk management strategies. Regulatory adaptation is also important, and some markets, say India or China, have stricter rules on foreign ownership, and so it might be required that the insurer develop a JV in local partnership, whereas other markets such as Singapore have a more open and free environment, and carriers are allowed to operate more freely and open and compete at that global level. I guess the last thing is risk management across for nat cat catastrophes, which is always top of mind for most insurers, and how they're deploying their capital in different regions, how they're budgeting for that, how much are they allowing from year to year, or how much are they allowing from policy to policy. And so in high nat cat areas such as Japan or the Philippines, where typhoon and earthquake is prevalent, they'll be thinking more about how to get that level of protection. Is it in cat bonds? Is it in reinsurance solutions? Whereas in areas with lower nat cat, the markets will be thinking more about different solutions for other exposures such as supply chain or delay and disruption.
Thank you, Vincent, for sharing your insights. It was a pleasure having you with us today.
Thank you very much.